Ladies and gentlemen, good day and welcome to Zaggle Prepaid Ocean Service Limited Q4 and FY2024 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantee of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participants' line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Raj P. Narayanam, Founder and Executive Chairman. Thank you and over to you, sir.
Thank you so much. Good evening to all of you. Thank you for joining us for the Q4 FY24 and FY24 earnings call. On behalf of the company, I extend a very warm welcome to everyone. On this call, we are joined by Mr. Avinash Godkhindi, Managing Director and CEO, Mr. Aditya Kumar, who is our CFO, and SGA, our Investor Relation Advisors. The results and the presentations are uploaded on the stock exchange and the company website. I hope everybody has had a chance to look at it. Now I want to take this opportunity to give you guidance and narrative. This is our first annual result post-listing and I am very happy to share that the results are as per our guidance and expectations. Zaggle has doubled its revenue over the last 3 years, which is FY22, FY23, FY24, and with the current business projections, we intend to double our revenue over the next 2 years. So from 3 years doubling, now we want to move to an aggressive growth path of achieving doubling our revenue in 2 years. Without compromising on the profitability and margins, in 2025, which is FY25, we aim to grow our revenue by anywhere between 45 to 55%. What we are seeing in the industry is that B2B SaaS is experiencing massive traction and the opportunities in the spend management space, especially in India, are growing multifold. There is an increased adoption by corporates and users on one hand and a digitization push by the government on the other. What we are seeing is improved propensity for companies to pay higher SaaS fee, which was not the case earlier. There is a remarkable jump in terms of the fees what we are able to charge, the corporates now per user, per platform basis than what it was before. We intend to capitalize on this opportunity and capture a significant market share in the coming 2 years. Why we are taking 2 years, because this is a very evolving landscape and fintech, as you know, is a very, very heavily growing industry, and that is why we want to keep the narrative to 2 years and not, generally it's 3 years, but we want to keep it to 2 years. We want to focus on garnering larger market share and make significant investments in technology, especially building deeper AI capabilities so that we can provide a differentiated, enhanced value proposition to our customers. Zaggle has always partnered with and worked with very large banks to make sure that we maintain the highest level of regulatory and compliance standards. For the past few months, all of you would have seen that there has been increased regulatory scrutiny and increased compliance, which has been required by the regulator. This presents a challenge for many of the smaller, firms and startups and companies which have not strictly followed the law of the land. But for a profitable and listed entity like Zaggle, it presents us with the opportunity as our partner banks and customers want to work with reliable and compliant partners. Now I would want to take this opportunity to give you the Zaggle business update. The positive momentum that was witnessed in previous quarters continued throughout the Q4 FY24 as well, and Q4 FY24 and FY24 have been very fruitful for us, reflecting strong performance in revenue and other key profitability matrices. I am happy to share that we have upheld our guidance for the financial year. For the quarter Q4 FY24, revenues grew at a healthy 37% Q on Q and 46% on a YOY basis respectively. The growth potential is clearly visible in the kind of contract signed by the team in Q4 and the strong visible pipeline for FY25. We intend to continue the momentum under the stewardship of a strong management team and double our revenues in next 2 years. Just to give you, a brief about the financials, our total revenue for the Q4 FY24 was about 273 crores compared to 187 crores same last year Q4 FY23. In the EBITDA, it was 27.16 crores against 24.89 crores. Similarly, if you look at the FY24 versus FY23 whole year, our revenues stand at 775.6 crores against 553.46 crores, a jump of 40%. In terms of our EBITDA, it stands at 85.57 crores against 62.5 crores of FY23, showing a YOY increase of 36.97%. Similarly, if you just take the H2, which has traditionally been our strong quarter, and because of the seasonality in the business, 60% of our business typically comes in the Q2, in the H2 versus H1. H1 is 40% and H2 is about 60%. So in H2 of FY24, we did about 473 crores against 302 crores in H1 FY24. The EBITDA is about 50 crores in H2 FY24 versus 35.5 crores in H1 FY24. Along with the numbers, I would also want to give you the new strategic developments, which are taking place in the company. We have made a strategic investment in a company called Span Across IT Solutions Private Limited. Span Across offers digital products for online tax filing and financial wellness solution. This is a strategic investment, is a product accretive investment, and access to Span's product, which would be integrated with our SAFE offerings, thus increasing the value proposition for our customers. So now I would go on the customers and partners. In the recent months, we have onboarded multiple new customers, including marquee names such as Wipro, Westcorp, MQ Pharma, amongst others. Zaggle's product offerings are sector agnostic, and our extensive experience of serving clients in diverse industries positions us as an ideal partner of choice for any client seeking spend management solution. Also very glad to tell you that in the latest publication of Forbes, Zaggle was featured, and they spoke about Zaggle's IPO journey, which was a very nice feature. Similarly, Zaggle has been awarded the Best Digital Expense Management Platform, 2024 by Capital Finance International. The award highlights Zaggle's commitment to providing user-centric solutions that combines effortless expense tracking and powerful analytics tools. To talk about the future, growth, as already mentioned that we are looking at, 2x growth over the next 2 years. We ourselves look at that we are at cusp of our growth phase. The market looks fantastic, beautiful, positioned for growth, and as it is maturing, there is a growing recognition of the significance of spend management in uncovering key business value drivers. We are set to drive growth by both acquiring new customers and cross-selling to the existing ones. This year, we are putting a special emphasis on cross-selling of our products as well as of our partners in the space of insurance, loans, taxation, investments, etc. We are actively looking at opportunities For inorganic expansion, we are looking at companies which are EBITDA accretive or product accretive, or the ones who will give us access to new geographies. We are in active discussions with few players across different but synergistic domains like API banking platform, payments, and possibly NBFCs. The revenues from these acquisitions would be in addition to our organic revenue growth, which we have already mentioned that we would like to grow so that we double our revenues in next 2 years. We are also pursuing international expansion plans as part of our growth strategy, leveraging our expertise in the domestic market of creating a profitable and successful business model. We are exploring markets in the US or North America. During our last call, if you remember, we spoke about our initial steps to explore the MENA market. But, after doing significant diligence, on the market, we realized that, MENA may not be deep enough for Zaggle, to go and launch operations there. Similarly, we had parallelly started work on the US, and what it shows is that US is a very, very large TAM, a better right, to win for us and to provide a better ROI. With this, I would hand over to our CEO and MD Avinash to take you through some business updates. Thank you.
Thank you, Raj. Good evening, and thank you to everyone for joining. Our consistent performance is a result of our commitment to innovation, focus on customer satisfaction, and relentless execution of our strategy. Zoyer, our accounts payable platform, which is bundled with our business credit cards, played a pivotal role in this year's performance. Launched just over a year ago, Zoyer is strategically positioned to help us garner a significant market share in the accounts payable platform space. Our strategy is to onboard corporate clients and their network of employees, channel partners, and vendors who become our ultimate users of our solutions. This helps us to keep our CAC to a minimum. Allow me to throw some light on a few operational metrics. In Q4 of FY24, we added 179 clients on a quarter-on-quarter basis, taking our current number of total customers to 3,016 as of March 31st, 2024, vis-a-vis 2,411 as of March 31st, 2023. The active users on our platform stood at 2.73 million as of 31st March 2024, with a growth of 20.3% year-on-year and 7% sequentially. We recently onboarded Axis Bank as one of our banking partners, taking our total banking partners to a count of 14. By collaborating with numerous bank partners, we have strategically diversified our exposure and we maximize opportunities for growth. Our partnership with Axis Bank and Nishi Forex will help us expand our offering in the space of Forex cards. We've also partnered with some marquee other banks and institutions in Q4. I'm extremely happy to announce that we got empaneled with 3 public sector banks, Punjab National Bank, Indian Bank, and Canara Bank, as their fintech partners for providing digitization solutions. Now we have public sector banks as our partners, along with marquee private banks. We see substantial business coming from these PSB banks over the next 2 to 3 years. We also partnered with Ease My Trip and Ria Travels, wherein we would be integrating their travel solutions with our expense management solutions for our corporate clients. Our partners feel comfortable working with a large listed company, fintech company, which is already partnered with multiple large Indian banks, and this gives us an edge over other smaller players and companies which haven't been strictly following guidelines in the letter and spirit. Our combination of prepaid cards and credit cards bundled with our software helps the corporates seamlessly manage their intricate process of tracking, scrutinizing, and analyzing their organizational spends. As we provide multiple solutions to an organization, it reduces their hassle.
Ladies and gentlemen, we have lost the management connection. Please stay connected while we reconnect them. Ladies
Hello.
and gentlemen, we have the management connection back again.
As we provide multiple solutions to an organization, it reduces their hassle of working with multiple vendors and making integrations with multiple platforms. Allow me now to throw some light on the monetization of our various products along with revenue contribution in FY24. Our platform fee stood at 31.2 crores, that is 312.5 million. Program fees, which is primarily our interchange earnings on transactions, amounted to INR 3218.4 million. Propel Points revenue stood at INR 4225.1 million. This is received from customers for issuing reward points, Propel Points, to the customers, employees, and channel partners. SaaS fees and program fees are reported both on a net basis with almost no direct expenses involved, which give us a gross margin of about 94 to 95%. In contrast, Propel Point revenues are recognized on a gross basis, and the gross margin for this varies between 7 to 10%. Client-wise revenue concentration is limited, with the top 20 customers contributing less than 20% of the revenues. Additionally, only 20% of the corporates currently use both Propel and Safe, while Zoyer is a newly launched product. This affords us a huge opportunity to cross-sell our products to our existing customers. This year, we also added 127 new team members, strengthened our leadership across multiple levels in the company. This is an A team at Zaggle, which would support our growth ambitions over the coming years. Our tech team is also working on multiple AI use cases, and one of them is RASBot, an AI-enabled chatbot which would help both our customers as well as our employees. It is still in the learning phase and its performance would improve over time, but our initial reads are very encouraging. We are positive about leveraging emerging technologies to propel our growth further. Thank you, and now I hand it over to Aditya to take you through the financial updates.
Thank you, Avinash. Good evening, everyone, and thank you for joining today. I would like to walk you through our latest quarterly and annual financial results. Here are the key points. In the past quarter, we saw a healthy growth rate of 46% compared to last year and a 37% growth compared to previous quarter in our operational revenues. Also, this is our highest ever quarterly revenue. This quarter, our gross profit grew by an impressive 78.5% on YOY basis and 57.7% on QOQ basis. Gross margin is 59.1% compared to 51.3% in Q3 and 48.3% in Q4 FY23, which is on account of increase in program fee contribution in revenue mix. During this quarter, the employee costs were consistent, amounting to 83.2 million in Q4 FY24. Our adjusted EBITDA for the quarter has grown by over 9.1% on YOY basis and 18.8% sequentially to INR 271.6 million. Our cash PAT, which includes net profit along with depreciation and ESOP expenses, has had an uptick of 29.4% on a year-on-year basis. For FY24, our revenues have surged by a remarkable 40.1% YOY to INR 7756 million compared to INR 5534 million last year. Our adjusted EBITDA has achieved substantial growth, increasing by 36.9% to INR 855.7 million. Significantly, our cash PAT has experienced a notable surge of 54.8%. As on 31st March 24, our gross debt reduced to INR 736 million as compared to 1210 million in FY23. This will lead to reduction of finance costs in FY25. Now, I will request moderator to open the floor for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rohan Mandora from Equirus Securities. Please go ahead.
Good evening, sir. Thanks for the opportunity and congrats on good set of numbers. Sir, on slide 7 and 8 of the presentation, we have given certain strategic alliances that we have done recently. So just wanted to get a sense on how should one look at revenue opportunities as well as EBITDA opportunities from these alliances over the next 2 years?
Hi, Rohan. Thank you for your question. So these are exciting partnerships, whether it is our PSB banks, public sector banks like Indian Bank, Canara Bank, and Punjab National Bank, or our travel partnerships. And each of these partnerships allow us to expand our reach. If you look at the public sector banks, they have a great base of corporate and consumer base, and by embedding our SaaS platforms with their current offerings, we are able to reach to a much larger audience across different geographical spread as well as different sectors. Similarly with Via and Ease My Trip, as we all understand, travel is a very critical expense and that's growing very rapidly. And by adding the capabilities of RIA and Ease My Trip, we are augmenting our current expense management platform to offer much more flexibility for corporates to do self-booking on our platform itself. What this means is that a lot more spends would flow through our platform. In this case, we also earn commissions for every booking that happens through our platform. That's again true with partners like Nishi Forex, where Forex is a huge opportunity, and whether it's Axis Bank as a Forex card partner or Nishi, we have the opportunity to be able to tap into the Forex space. Currently, our prepaid cards work in India as per RBI regulations, but with Forex cards being launched, we are now able to bundle our software expense management platform with a Forex card for the same set of employees and users who will be traveling abroad and incurring expenses.
Sure. So, sir, out of the total revenues in FY24, what proportion of revenues will be contributed by Forex-linked cards, and what is our expectation for 25?
In FY24, Forex has not yet started to add revenues, Rohan. We are currently yet to go live full-fledged on the Forex programs. This year, we'll see those programs getting launched. As you would be aware, any of these programs have a gestation period because of the API integrations and other arrangements that need to be made. But we believe a substantial amount of customers would get onboarded this year, and revenues will start to flow in this year.
Sure. So secondly, on the take rates in the gift card business, this quarter was around 12%, previous quarter was around 6%. So just want to understand, how should one look at this going ahead into FY25? What kind of take rates can we see, and overall, what kind of a growth will we see in the gift card business?
In the Propel Points revenue, Rohan, we would typically give a guidance of about 7 to 10% in terms of margins. As previously mentioned, also last quarter was a bit of a aberration, Q3 as in, but Q4 things are back on track, and we expect the margins going forward also to be in this range itself of about 7 to 10%.
Sure. And in terms of growth in this business?
This business is growing steadily and it's growing well. Of course, the highest growth has come from program fees, which we expect to grow well in this year as well. And SaaS is a great SaaS fees is a great line of revenue, which is again growing very healthily, and we are investing a lot of our bandwidth in ramping that up as well.
Sure. And so lastly, when we are guiding for revenues doubling in 2 years, how should one think on EBITDA over the next 2 years? Will there be any operating leverage benefit playing out, or we should build in a similar kind of EBITDA growth of like over the next 2 years, similar to the revenue growth?
It's a great question, Rohan. It's a dynamic environment that we are in, and we would want to give you a slightly conservative guidance in this regard. So, we would currently estimate that the margins would be similar to current levels. Having said that, operating leverage is very much something that's going to kick into this business. The question is, would it kick into the next 2-3 years, or would it happen after that? Our focus right now is to capture maximum market share, and we believe we are well poised to be able to do that.
Sure, sir. Thanks. I'll get back in queue for further questions.
Thank you. The next question is from the line of Darshan Garg from Samiksha Capital. Please go ahead.
Hello. Thanks for the opportunity. If we see, other assets has increased in the last 3 years, which has impacted our cash flows, and the major reason for that is the prepaid cards with loadings. So going forward, how it will be going?
Thank you, Darshan, for your question. As we mentioned, we are poised for a lot of growth, and the growth, if you see this year as well, a very large part of the growth has come from program fees, where the growth is about 90%. And while Propel Points as a line would continue to grow, we would be calibrated in that growth. Also, we are working very diligently to improve our cash flows. Having said that, we see a tremendous opportunity in the market, and we are deploying the cash or investing the cash to be able to grow and expand the business and expand the reach that we have.
Okay. My second question is, what would be the effective tax rate going forward, as there has been a fluctuation historically?
Aditya here, Darshan. So effective tax rate from this year onwards, if you see, will be around 26 to 27%.
Okay, that answers my question. And the last question is, like, going forward, can you give the guidance on the receivable days?
Sorry, Darshan, come again?
For the going forward, what would be the receivable days?
So it will continue to be at 55 to 60 days kind of a number, but we are working on it, best to leverage that in upcoming couple of years.
So Darshan, our view in these matters is to give you a slightly conservative guidance while we continue to work internally very hard to improve this. We believe it's as we're adding more bank partners, public sector banks, other banks, newer customers, some of these things take time in terms of processes, etc., with them to settle down. That's our guidance, which is a conservative guidance.
Okay, thanks.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. The next question is from the line of Grishma Shah from Envision Capital. Please go ahead.
Thank you for the opportunity. Congratulations to the team on a very good set of numbers.
Sorry to interrupt you, ma'am. May I request you to please use your handset?
Is this not audible?
Ma'am, your voice is very less.
Now is it proper?
Yes, ma'am. Please go ahead.
Yeah, thank you for taking my question. Congratulations to the management team on a very good set of numbers. Curious to know why should, in Q4, the cashback and incentives, see a strong jump? That's question number one.
Thank you for your question and your kind words, Grishma. If you see the cashback and incentives line,
Ladies and gentlemen, we have lost the management's connection. Please stay connected while we reconnect them. Ladies and gentlemen, thank you for patiently waiting. We have the management connection back on call.
Hello.
Yes, sir.
Yeah. So if you look at the cashback and incentives line item, it's linked to the program fees. Program fees has grown very significantly as well. Point number one. Point number two, if you look at a lot of space got created because of certain regulatory events in the last quarter, and we wanted to take advantage of this opportunity, and these opportunities come rarely to capture market share because we had taken a conservative view on the compliance side by directly integrating with partner banks through APIs and not using third-party platform solutions like BPSP and others. We were in a healthy position to capture that space that had been vacated. But to capture that space, we had to, pass on some additional cashback and incentives. Also, this line includes the cost of funds for the credit that is offered, free credit that's offered in credit cards. Mind you, there is no risk sharing or any risk that we bear, but we do bear the cost, and this line item includes that as well.
Okay. So what is the outlook going ahead, given that Propel will grow at a recent rate? SaaS business has its own way to grow, So how will this line item for us, earlier you were guiding that we will do only 100 crores of cashback incentives. Now this is at least at 217 crores for FY24. So how does it grow going ahead?
So this line item has three different aspects, Grishma. One is cashback for prepaid cards, the second is cashback for business credit cards, and the third is the cost of funds, right? So you have to, and last FY23, this only had one component which was cashback against, for incentives on prepaid cards, right? Yeah. So please bear that we anticipate program fees to grow very healthily this year as well. Our overall guidance is on earlier guidance for growth was 40% plus, if you remember, for this financial year. Upped that guidance to 45 to 55% for this financial year. So we are very bullish about our overall growth, and a large part of that growth would come from program fees.
Okay. So we should look at it in that context. Understood. And these other current assets have grown from 49 crores last year to 128 crores this year. So what is the reason for that?
Hi, Grishma. Other current asset largely includes prepaid cards for loading and gift vouchers in stock. So this March being the last month, 30 and 31st being holidays, so we have kept the cards loading in order to make the fulfillment, where we have done the fulfillment in the April 1st week. That's why the number on the month end, it looks a little bit higher.
Okay. And a lot of intangible assets under development. So is there a new product in the offering, or is something else?
Those are existing products only. One is Zoyer, which is yet to go completely live. Possibly we will capitalize that somewhere in Q3 this year. And Zatex, which we started building in the last year, the analytical platform. So that also a period of time will capitalize once it gets completely done.
Okay. Thank you and good luck.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your question to 2 per participant. Should you have a follow-up question, we request you to rejoin the queue. The next question is from the line of Naitik Mohata from Sequent Investments. Please go ahead.
Good evening, sir, and thank you for the opportunity. So my first question would be, what would be the ESOP guidance for FY25?
With the existing set of costs, without any new issuance of ESOPs, this year it will be around 8 crore.
Okay. Also, sir, in your opening commentary, you had mentioned that the customers are willing to pay a higher SaaS fee for the kind of product that we offer. So have we taken any price hikes for our software, or do we plan to do that anytime in future?
Thank you for your question. Yes, our rack rates have gone up significantly over the last couple of years, Naitik, and as we are expanding our capabilities and using technologies like AI, etc., we believe we would be able to command a premium. Also, one of the things is there's a very clear network effect here. More corporates, large names like Wipro, etc., who are onboarding, they allow us to be able to onboard other customers who are then able to use our platform, as well as the quality of the banks that we work with today. We work with 14 banks, including banks like SBI, ICICI, Axis, Kotak, and PNB. Bob Card. So these are very big names in the industry, and they also both bring us customers and references, as well as the fact that they have evaluated our platform and software and found it secure, found it compliant, and found it highly valuable, adds to the ability to command or expect a premium.
So, will it be possible to quantify for a period like a 2-year or 3-year period how the prices have evolved?
But in the last 2 years, the price has gone up significantly. If you look at it, our rack rate in about 2.5 years ago was 99 rupees per user per month. This is now 249 rupees per user per month. Right. While the final price is a negotiation with our corporate customers, depending on the volumes and the overall opportunity size, this is the price movement that has happened, and we believe there is a significant headroom available in the coming years for this to go up.
Okay. Thank you for the opportunity, sir. That was helpful.
Thank you. The next question is from the line of Sanidhya from Unicorn Assets. Please go ahead.
Hi, am I audible?
Yes, sir, you're audible.
Yeah, okay. So firstly, congratulations on great set of numbers. So, 2 questions, starting with the program fee, Propel and platform. So I was just checking the program fee is like 90% growth, Propel is 60+% growth, and platform is like 30% growth. So, are we introducing any new line into the business, or are we seeing the 45% growth which we are targeting for the next year from these 3 only?
So largely, if you look at it, Sanidhya, thank you for your question. Largely, in our business, we earn through software, which is SaaS fees, and through transaction, which is program fees, and through Propel points. Right. So these are wide enough in terms of range. We of course would get these lines of income through a wide variety of cross-sell and upsell, and that would augment more opportunities to monetize, right? But these are the lines of revenue that we are looking at broadly right now.
So, but I was just checking that the program fee, we have reduced our gross margins from like 40% to 33% now. And like for Propel, if I am not sure if that's the right calculation, but cost of point redemption gift card is the cost for Propel, right? For the Propel business. And it was like 320 crore last year with the revenue of 260 versus 423 crore revenue this year and 380 crore cost. So is this the right attribution? Like the Propel business is turned profitable now on the gross basis?
The Propel business has been profitable for long, and the Propel business also contributes to the program fees. So it's not a direct because when the points are issued to a user, she can choose to redeem it for either vouchers of over 300 brands, and in such a case, we recognize revenue as Propel points revenue, which is a gross basis. And if the redemption is for a prepaid network card, network as in Visa, RuPay, MasterCard card, which we issue in partnership with banks, in such a case we earn program fees. So program fees comes from Propel, comes from Save, comes from Zoyer. Program fees comes from prepaid cards as well as credit cards. It's everything that we earn on transactions by invoicing to partner banks and networks.
So this cost of point redemption plus gift card is the combined cost of all the three different segments?
No, it's the cost of only the points that are redeemed to buy vouchers from partners. So whenever the redemption is for a voucher of, say, a Shopper Stop voucher, when we procure this Shopper Stop voucher, whatever is our cost to procure that voucher comes under the cost of redemption of points.
So is there a thing that these vouchers could be there in the inventory as well, right? We are saying the other current assets, these vouchers could be there, the cost that we have bared in FY2024?
There is a component there, and reason being, every especially in the end of the financial year, we get favorable commercial terms, and we hit overriding commissions, etc. So for a brief period, we keep this in our inventory, and this gets used in a very short time.
Okay, just a bookkeeping question. So 11.27 gross income from in the other income, that's entirely from the cash that we have in the balance sheet?
This is relating to interest income large extent for the IPO funds, whatever has been received, that has been kept in the FDs.
And since we have so much of cash in the balance sheet, are we really actively looking into M&A, or we are just exploring on a normal basis? Like if we get some deal, then we will do. Otherwise, we are good on our own. We have a good 350 crores of cash, which really gives us a huge opportunity, I think.
The funds which are lying in the bank shall be used towards the IPO proceeds, whatever we have given in the prospectus. But having said that, we are exploring, as Raj explained in his initial opening remarks, we are exploring for any EBITDA accretive companies in similar our space.
Okay, and just if you can throw some light on Torrent's partnership.
Sir, may I request you to rejoin your queue for the follow-up question?
Yeah, sure, no problem.
Thank you. The next question is from the line of Rohan Nagpal from Helios Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. I had a couple of questions relating to Zoyer. So could you, I think in previous calls you've broken out what fraction of the program fees is coming from Zoyer. So what was that number for this quarter?
The overall Zoyer has done very well, and about 30% of our revenues of our program fees particularly is coming from Zoyer now, right?
Okay, so that's about 40 to 45 crores. Am I audible?
Yes, you are audible, yes.
Okay, yeah, so that's about 40, 42 crores, right?
So the program fees was about 312 crores, and 30% of that would be...
So I said for the quarter, sorry.
Q4, yeah, okay, yes.
Okay. All right. And, oh wait, no, so you said 30% of, even for the year, it's 30%.
Sorry to interrupt you, sir. May I request you to please use your handset?
Yes, just okay. Okay. And could you are take rates broadly stable compared to the rates that you've had through the year?
Broadly, yes, but as use cases are expanding, look, take rates for transactions fluctuate depending on the use category, right? So if you're filling gas in a gas station or using the cards to pay your utility bills, obviously the take rates are lower.
Okay.
And as we have started to offer business credit cards, both along with Zoyer and Save,
Ladies and gentlemen, we have lost the management connection. Please stay connected while we reconnect them. Ladies and gentlemen, thank you for patiently holding. We have the management connection back on the call.
Hello.
Yes, sir. Mr. Rohan, may I request you to please repeat your question again?
Yeah. So I think are take rates broadly stable? I do understand that there are different take rates depending on the nature of the transaction, but are they in the 1.8% range that you had mentioned earlier, or are we seeing some compression as usage expands?
As usage expands, naturally, the take rates would go a little lower, right? And which is what we are seeing. But right now, we are seeing the full bloom in terms of, usage across, GST payments, utility bill payments, fuel, and right now we are seeing, still at a very healthy rate.
Got it. And the last thing I want to know is, within the incentives and cashback line item, what fraction of this would be cost of funds?
It would be about 25 to 30% would be cost of funds.
And how should one think about the evolution of this cost of funds line item as program fees and credit card usage expands?
Of course, this cost of funds is something that's going to be as per our arrangements currently going to be a part of our expenses. But as we scale up, we hope to be able to have more favorable terms because we'll have more banks competing for the same pool of spends, and hopefully we'll be able to see that come down over the coming years.
Got it. Thank you. I'll rejoin the queue.
Thank you. The next question is from the line of Bhavik Shah from MK Ventures. Please go ahead.
Congratulations, sir, on good set of numbers.
Sorry to interrupt you, sir. May I request you to please use your handset?
Yes. Is it all better?
Yes, sir.
Yeah. So my first question is on the Forex part. Sir, can you just take an example and help us understand how will these partnerships or travel partnerships and foreign partnership, Forex card partnerships work out? What will be the economics here? How much will we earn? And what will be the impact on our, say, balance sheet? Will we need to have again give a loan, like the working capital loan to them, or how will it work?
Yeah. Thank you for your question. See, if you think of any employee, they don't want to use different apps or different platforms to submit their claims, right? Whether they are incurring expenses domestically, whether they are incurring expenses on an international travel, as long as it's a corporate business expense, they would want to use the same app, the same dashboard to be able to file their expenses, right? So historically, our expense management platform worked very well for domestic expenses. But when the employee would go abroad, they would have to use a different Forex card, which would not be API integrated or coupled with our software. Right? And hence, they would have to manually collate these bills, scan these bills in our app, and then those would have to be reconciled with the transactions against the Forex card statement by somebody in the back office in the finance or accounts team of the corporate. By issuing Forex cards in partnership with issuers, we will now be able to give an automatic reconciliation and knockoff of all the expenses that are incurred against bills that are scanned in the Zaggle app. We obviously have optical character recognition. So the same way the corporate credit card or the domestic prepaid card, domestic currency prepaid card works, your Forex card would also work very similarly. Right? So it's a uniform experience, it's automatic recon, and all the dashboards and all the analytics that we are able to provide, that also automatically gets populated and those expenses are shown in the dashboard. Our unit economics also is very similar. There is a SaaS fee, there is program fees for transactions that are there on Forex. Forex has higher lines of income because of both the interchange being higher on Forex transactions, significantly higher, as well as, there is the income on ATM transactions, the exchange rate itself that you buy the card. So overall pool of income is higher, and hence our unit economics works better with our partners.
Right, sir. And so what portion of the program fees revenue will come from Forex cards in FY25 or 26?
It's a little early for us to give you a concrete guidance there because we are yet to start clocking revenues on Forex. Right? We hope to do that in the coming quarters. So maybe it would be too early for us to give you a concrete guidance on that, sir.
Right. And so we are making, as you told, under intangibles, we have Zatix as a product which is coming up. So will this be an additional stream of revenue, or will this be just an enabler for all the other three service platforms which we have without any coming out?
So Zatix has a very clear monetization where irrespective of whether the Zatix, the card is issued in partnership with Zaggle or it's a card issued directly by the bank to a corporate who is a customer of the bank. When the Zatix platform is used for analytics, we earn a fairly decent amount of commission or fees, which is recurring in nature for all transactions that are done on the platform. So this is, in some ways, you can look at it almost like a SaaS fees. It's a recurring fees where the sale is done by the bank and annuity income keeps coming through for us.
So we record it where in the line item? Where does this revenue sit in?
So this would also be part of our SaaS fees.
Okay, in SaaS fees. And just to recheck, so you told the margins would be similar, and just to some other participant, you told the margins would be in the range of 7 to 10%. So is that the range, or will be northwards of 10%?
So the 7 to 10% guidance was specifically for the gross margins in Propel points, right? Which is one of the three line items in terms of revenue. One is SaaS fees, the other is program fees, and the third is Propel points revenue.
Right. Okay. Thank you so much, sir.
Thank you. The next question is from the line of Ankush Agrawal from Surge Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. So again, on the incentive cost, if I look at the number, say Q3 versus Q4, our program fees has increased by about 50 crores and the incentive cost itself has increased by 50 crores. Right? So ideally, we have not made any gains. And I can understand that we are trying to, as an introduction to Zoyer to increase the adoption, we're spending higher on that. But going ahead for, say, next 2-3 years, do you believe that this number will reduce? Because, say, for this quarter, we have spent as much as 80% of program fees on incentive costs.
As I explained to you, sir, the cashback and incentives line item also includes the cost of funds, right? And obviously, as we are ramping up Zoyer and issuing business credit cards, which includes both corporate credit cards and charge cards or purchase cards, initially the COF line item also is more significant, right? As usage becomes more ubiquitous, you will see that the overall blended COF goes down. And as I also previously explained, we've taken a clear call to capture the market and because of an opportunity that has opened up given the recent regulatory actions, right? Over time, we expect this to stabilize.
Okay. Because, see, I think a couple of quarters back, we had guided for an adjusted EBITDA margin of 15 to 16% in a couple of years. And I think in today's call, you have mentioned that you expect it to remain stable at 11%. So has there been a change in an understanding that, the growth for the company would be much higher than what you had anticipated maybe a couple of quarters back, and say the outlook on the margins has reduced because of that?
Our long-term EBITDA guidance would be higher, right? But it was not for the next couple of years. We do believe this is a hyper-growth phase for us, and we would want to capture the market, and the tailwinds for digitization, the tailwinds for working with a, stable, profitable fintech is very high. And we are beautifully poised to take advantage of that opportunity for the next couple of years.
Right. But at least we'll maintain this current year margin, right? Even if you're investing behind growth?
I wouldn't want to give a very specific answer to that because the landscape is changing rapidly. And, it could go a little bit up and down, but broadly in the same range.
Right. Got it. Secondly and lastly, so we're now looking to enter US market. So do you have a certain kind of investment that we would be needing to break into that market? Do you have some kind of guidance that you can highlight that? Or it would be a nominal amount, say just, that would be spent on marketing our existing products?
See, it wouldn't be just a nominal amount because the US market is a big opportunity for us. Having said that, it's probably too early for us to give you a concrete number because we are also learning more about how our platform would be received in the market, which is the right target group to go after. And we always take this approach that we are very slow in our and calculated and methodical in our planning phase. And if you look at it, even with the Zoyer and credit cards, we gave a good 1 year to understand the market and to build the platform according to the market needs, and we didn't try to hurry up clocking revenues. So whole year went into that, and last year you've seen how it's performed. So right now we wouldn't want to give you a specific answer, but we are committed to go into the market, and we are assessing it very carefully and doing a lot of work on seeing who's the right customer, what's the offering that would work well, the product market fit, and what's the go-to-market strategy. Both PFM and GTM is something which is in the works.
Okay, thank you.
Thank you. Ladies and gentlemen, we will take that as the last question. I would now like to hand the conference over to Mr. Raj P. Narayanam, Founder and Executive Chairman, for closing comments.
Sure. Thank you so much for all of you, to wait and patiently hear us out. With this, I conclude the call. If you have any further questions, please contact SGA, our Investor Relation Advisor. Thank you once again, everyone, for joining us today on this earnings call. Thank you so much.
On behalf of Zaggle Prepaid Ocean Service, that concludes this conference. Thank you for joining us, and you may now disconnect your line.